So the second topic is poker and trading part 2, and we can get straight into it with the discussion. And the first part is, with poker and trading, there's high betting before the flop. Flapper Chip, your thoughts on that?
Sorry, explain.
So people like to bet. See, I don't want to reveal too much because it'll give you too many ideas. But people like to bet too much before the flop. So before the cards are laid out on the table, they base their bets on what they see in their hands. Yeah. So how would you compare? Yes, sorry.
What delusional confidence, that sort of thing.
Very good. I love that. I love that. I'm writing that down. Delusional confidence. Okay. Do you want to add on to anything? I know it sums up everything, but that's brilliant.
Yeah, that's it, isn't it? That's exactly it.
Okay.
I would imagine.
Dr. Sam, thoughts? It's a little bit more advanced than last week, but I think when we get into it and we drill into it, we start to understand the similarities between the two.
I think normally what happens is that, particularly with investment, there is a hype created around an investment, particularly an IPO. And that drags people in because they are enticed by the hype. And the same thing often happens with a bet, where you have this innate faith that you're going to be gifted with a good hand, and by being gifted with a good hand you have an advantage over the rest of your players. So definitely there's a similarity.
I love it. Innate, what did you say there? Innate?
An innate faith.
Innate faith.
That you're going to be dealt a good hand. You're going to be dealt a good hand. And that's exactly the same thing when one goes out and invests. You invest in a company that you know very little about, that has been marketed very aggressively and very well.
Okay.
You have this innate faith that you're making the right decision.
All right.
So that's the similarity.
Brilliant. So there will always be times of strong market moves, and there'll always be time of high betting. So I just have to mute you, Dr. Sam. Maybe just move to the top because I can hear the voice. Drop the alt space to 25. That should do it. So with poker, you get times where players like to bet aggressively and blindly before the flop is revealed. We call it the flop. And it's these times that lead to the amateur poker players losing their chips very quickly. And with trading, it's not exactly the same, but there are similarities in that with trading you get economic data. For example, and I want to see emojis just to see if you understand what I'm saying. You get economic data such as non-farm payrolls, black swan events, interest rate decisions with big investors and traders. You know, they like to drive up the market too high or too down before the news even comes out. So they make their trading bets based on the news to come out, which leads to a form of market manipulation. And now the question is, so what, Timon? And if I have to think about it, if I was in a poker game and these players were betting very high based on their cards, regardless on what my cards are, and remember this is a personal opinion, I would fold because the risk is too high for me to play on. I want to see what the cards are on the table. So even if I have two aces, I don't want the poker players to get me out. Okay? With trading, very, very similar. And investing, Seal. And that is, I ignore hype. I don't go and watch the Bloomberg, which has red and green flashing and powerful music, and it gets you to the stage where your heart is palpitating. And the second thing is I ignore all the other market environments, the market news. So, for example, the non-farm payrolls, I do not look at. When Donald Trump speaks, I do not fall for that hype. So, in fact, on the first Friday of the month, I will not trade at all during non-farm payrolls, because that's when the big boys and the market makers and the smart money are going to pile in, and regardless of whether you go long or short, you're going to get stopped out. So now you can understand that there are similarities between the high betting before the flop that we need to avoid as traders and investors. We want our heart rate to remain at 65 or 60. All right. Does anyone want to say anything other than what I've said? We still have a small audience. Where is everybody? Normally we have about 15 people by now. Maybe they'll pop up later, or I don't know, maybe it's a bad day. Anyway, we still have Facebook, which has not asked any questions yet. So please ask your questions if you have, and Mati Trader, Dr. Samuel, let me know if anybody in Mati Trader is asking me any questions. Let me just see here. Which means that the event is going to go nice and quickly and we can continue enjoying our weekend. Second, we bet against the unknown. Seal, your thoughts with investing?
As pertains to this question, betting against the unknown?
Yeah.
I guess in many ways, for someone who doesn't have any insider information, like about what a company is about to do in terms of hiring and firing or releasing a new product, every time that you trade, you are betting against an unknown.
All right. And what is the unknown in this case?
The unknown is the future. Well, in the case of, let's say, a speculative stock purchase, you're buying a stock assuming that it's going to go up in value. The unknown is whether or not that's actually going to happen.
Okay. Right. So we're talking about the future decisions that pop up that we least expect. Is that correct?
That would be a much better way of putting it, yes.
It's different ways. Same thing. Flapper Chip, any thoughts?
No, well, it's hard to get get another sentence on it, but you know, it's unpredictability, chaos. There's no order in it. So on.
Well, you'll always find there's some form of order inside chaos, which is what us as traders and investors try to extrapolate.
Yeah. I mean, that's the hook for me.
Yes.
You know, working out rhythms in things that have none. But,
so I know it's a little bit past topic, but when you do your back testing and you see that outlier that forms, that causes the chaos, if you go back in history, you'll see that history doesn't repeat, but it rhymes. And if you go back through your back testing charts, you'll see that those outliers form more than you ever imagined. And you actually find that it actually complements towards the systems that you're using. But I remember when we had that professor in and we spoke about neural networks and order and chaos. I remember you were there late at night. And it just triggered to me saying that outliers are actually part of the track record. If it wasn't part of the track record, there would only be one. But there are more if you go back 10 years, 20 years, and you'll see a similarity.
Oh yeah, just natural rhythms, yeah, like Fibonacci.
Exactly. Seal, yes, your hand was up.
Well, I'm looking at the graphic on the screen and it brings something to mind. It's almost as if whenever you are playing poker or trading securities, you are betting against the unknown because you don't know anything about the other person's hand. Let's say that I'm going to buy Apple stock because I know they're going to release a new iPhone. Let's say it was 2 weeks ago. So I think the stock is going to go up. I don't know whether or not that iPhone is going to be substantially different than the previous model, or whether they're even going to do it at all. It's an unknown quantity.
Exactly, and
So
that
every
is
trade is a bet against the unknown.
and that is what also creates the excitement, but also gets us to the point where we start lowering our expectations within an event to occur. Because if you think about the Oculus Quest 2, now for me, because the Oculus has never come into South Africa, for me it would be blown away. But when I read the reviews, for those who have experience with the Oculus, they say that there isn't a big difference between Oculus Quest 1, Oculus Quest 2. A lot of people are selling the Oculus Quest 2. And so they have a lot more information that is in their known than those who haven't. So that's why I'm saying is when you go back in history and you go and look at the data and how it acted, all of a sudden the unknown becomes some form of known in a way. Welcome, Matt, the science penguin. Changed your name again. Dr. Sam, your thoughts?
Timon, I think it depends on the type of investment instrument that one is looking at. I mean, if you're looking at a speculative share, that definitely you're betting against the unknown. If you're looking at a well-established stock that has been around for 20 or 30 years, your return might not be as high, but your return is almost guaranteed. So it's relevant to what you
almost. The word that is the most important thing is almost guaranteed, which means that there is risk and incomplete information for the future. All right, so we're getting a lot of people to pop up now, so I'm going to have to populate the allow hand raisers, and I'm going to mute everybody. So if you have something to say, you will see on the right hand side it will say raise hand, and if you have something to say, bring it on. So to those that have just popped in, this event is about poker versus trading, and we're going to talk about the similarities between the two, and whether you're a poker player, a gambler, we're going to have a discussion. And even if you're not and you're thinking about investing and trading in the future, well, now you can challenge yourself, and remember to raise your hand if you want to say something. The first part was that aggressive trading happens before the flop. Wow, that was a little bit complicated, so I think we can just go to the second part, which was betting against the unknown. So with betting against the unknown, every bet and trade that we take is based on incomplete information of the future. So with poker, we are dealt hands and then bet on decisions based on not knowing what cards our opponents have, or what is shown on the river. This is all unknown. We then have the options to call, bet, raise, or fold during the process. And with trading, we take trades based on probability predictions without knowing where the price will end up at. So we do have historical data where we can, make assumptions and probabilities, but there is always that little doubt that the price will not go there, and hence we have high risk management rules that we follow. This is due. Why? So why is that? Yeah, I see what you mean. That this is a little bit more complicated than last week. But the question is, Nick, you should be here at Altspace, because I like hearing your thoughts. You shouldn't be here on Facebook. Just so you know, this event is streamed live on MultiTrader, which is which is my business, MultiTrader, timonandmulti.com, and you can go to the Facebook group. And if you want to join these events, add me as a friend, and then I'll add you to the Facebook Messenger group. And FSP Invest, guys, they are another group, about 50,000 people who can watch this event live, who they've been following me for the last 7 years. Okay, back to where we were. So why is there unknown information? Hello there, new people. Welcome, welcome. This is due to the new information that are coming to the market. For example, there are new traders, there are new investors that are coming into the market that are young, and that is changing the end results within the future. Supply and demand, the news coming out, economic indicators, micro and macro aspects within a company. All right. So then we have, so does anyone want to say anything else based on part 2? 3, 2, 1. Missed opportunity. Oh, someone's, you just made it. Hold on. Hold on, you can raise your hands. So then the third part is, Nick, I hope I'm going to see you soon on Alt Space. Same if John and I know Neville couldn't come, but you guys should be here because you learn a lot more. Similarity 3, you must learn to earn. Thoughts? Raise those hands and let's get the discussion and event started on the third point on poker versus trading. And let's start with, because sometimes I pick on the multi traders because I do want them to, I challenge them. Let's go with Matt, because I haven't heard from you today. What are your thoughts on learning and earning before trading or playing poker?
Yes, you can train poker without real money, and you can also use a simulator for trading. So you can learn before you start betting your money.
Right. Right. So you can start with a demo account, of course, and learn to trade before you put in real money. But you know, even when you put in real money, you're still learning, and you're going to continue learning. Even 19 years later, with the way the algorithms have changed and the probability and the liquidity has changed, I'm continue to learn. So, for example, I don't hold my positions as long as I used to. Right, Johnny? If you have a question, just raise your hand, and I'm happy to hear what you have to say. So at the bottom right, you'll see there's a raise your hand button. Nerd next door. This is about trading and investing, and welcome if you have something to say. So the thing is, when you learn to earn, you need to understand and gain as much knowledge as you can about poker and trading before you commit any money. So with poker, you need to understand the rules of the game. So over here, you've got to understand the order of the betting, which I have on this board on the left hand side. You have to understand the amount of money you should play per hand if there's antes in betting. And once you know these points, then you'll develop some form of game plan with each hand you play. There is little luck when it comes to professional gambling. Little luck, okay? But strategy and game plan are the most important things. With trading, you need to understand 4 main elements. The market. What are you trading? Why are you trading it? And where and how are you trading? The method. What system are you using to follow before you're taking the trade? The money. And this applies to investing as well, Seal. The money is the risk management rules to follow with each trade or investment that you take. And the mind is the most important thing. If you don't have a good frame of mind, you're going to lose. You're going to incorporate your greed and fear. So the frame of mind is what you need to develop. And all those encapsulates what you have to learn to be a trader or an investor. So I'm taking... Seal, I see you raised your hands. Yes?
Oh, I was going to say that one could increase their knowledge in order to increase their income. That's what I see when I read this statement, learn to earn.
100%. And it's not just trading and investing, it's pretty much all of the aspects that you do in life. So if you want to be, if Johnny and Nerd Next Door Guy wants to be a TikTok influencer, you've got to learn how to do it. You've got to learn how to earn. There are many, many different ways, and you got to take advantage of it. Same with poker, same with trading, same with investing, same with anything that you have passion. If you have passion, you can achieve anything. All right. You can raise your hands. Dr. Sam. Just unmute yourself, Dr. Sam.
Timon, doesn't it just boil down to having a good strategy? And that applies to everything in life. I mean, particularly, I mean, you've used the analogy poker and investing. So, I mean, that's a reasonably good analogy. So when a professional poker player sits down at the table, that professional player has a strategy. And us as amateur investors, because I'm not a professional investor, we have a strategy, and we sit down and we stick to our strategy. And I have found over the last 20 or 30 years, every time I have deviated from my strategy because I've been influenced by the news, I've been influenced by Bloomberg, I've been influenced by my peers or colleagues, I have lost money. So it's purely strategy.
The main thing is strategy. Just got to mute you, Dr. Sam. The main thing is strategy, where if you don't have a strategy, you don't have anything to follow in the future. But then you got to consider is, do you have the will, do you have the discipline, and do you have the inclination to follow that strategy? Because I can give anybody the multi-trader system, which I've used for decades, and do I think they're going to be successful? No. And why is that? Because they have not integrated it into their lives. They're probably going to go against it in many different ways. They're going to go against the strategy. So yes, the strategy is the thing you stick on the wall and you follow. But then you need the will, you need the discipline. And what about the time? You know, you got to have the time to, you got to choose the time, you got to choose what suits you as a trader and investor. And that's exactly why the way that I trade might not suit the way that you trade, and the way I play poker might not be the way Flapperchip plays poker. So for example, apparently I'm a nitty trader, a nitty better according to Shiseki, which I don't like, but I will take it, which means that I fold 93% of the time. And even though I fold 93% of the time, I will never lose, but I'll come maybe second or third. I'll never win because I just haven't nailed it yet to become a poker player. But Flapperchip might hate that style of poker playing, where he doesn't want to fold 93%. He's got more adrenaline. He's more aggressive with his betting. So you got to know who you are when you're an investor or a trader. All right. So strategy, yes, but then you also have to have the frame of mind, and you also have to have the know-how with that. So anybody else, you can raise your hands if you want to say something on that. Nerd Next Door, would you like to introduce yourself? I've seen you pretty much every week, so feel free to introduce yourself. Hi.
Hello, how's it going?
Going good.
Just I see you all on Instagram. I've been intrigued. Like I said, I heard somebody once talk about this same room, and I wanted to check it out for myself. I remember we interacted there on Instagram, and you had mentioned on Saturday.
Awesome. Well, thanks for coming and spending a bit of time here. If you're interested in trading or investing or something in the future that you might have an idea, you can learn. Every week we choose a completely different topic. We're also streaming this live on FSP Invest with over 50,000 followers, and MultiTrader, and on YouTube. So you can say hello to everybody You can look for the camera bot wherever it is, but it's actually hidden. But I do have to say that every couple of hours for international law. Thank you, Old Space, for teaching me international law. Let's carry on. So the third point, and believe it or not, this is the last point. So we're already 37 minutes into the event, and we're pretty much finished. And this is what happens when you guys don't talk a lot. And I do want to hear from you. I want you to challenge your thoughts. So even if you're not a trader or an investor, speak up. This is also good for, you know, speaking skills and confidence and being here. So the fourth one, that there is a similar trait between investing, trading, and poker, is perseverance. Dr. Sam, 1 second. You have the megaphone.
Timon, I think it's quite critical at this stage to now differentiate between investing and poker, because in poker you are dealt a set of cards, 5 or 7 cards, with the cards down, and you do not know what's in those cards. As opposed to an investor, you are dealt those cards face up, where you know exactly which company you're buying, which share you're buying, where it is in the cycle. So those we need to differentiate those two issues.
All right. So most investors believe that they must just buy and then hold. But if you actually look at the Benjamin Graham investment strategy, or you look at Charlie Munger's strategy or Warren Buffett, you'll see that there's criteria within the investment strategy that they use to follow, and it's similar with poker. Poker, it's not about the cards that's down. I want you to think of the cards as the markets, and as an investor, think about the cards as the markets. So with Warren Buffett, one of his criteria is blue chip stocks. The next thing is the top blue chip stocks. So Coca-Cola and Hoover and Heinz and all those companies. And then he says, all right, so we've got the blue chip stocks down. What is the PE ratio? What is the PEG ratio? What is the earnings per share? And he's got a certain criteria that he decides on that. So the cards are the markets. The strategy is what you do within the markets. And now I'm talking metaphorically. So I want you to see that if I deal you cards, and let's say you get 6 and 5, those are the markets that you have at the moment. Not great, medium probability. Same with investing. You get into a market, so for example, banks I haven't enjoyed this year. But resources I have. So when I'm dealt the setup for banks, I know that I have to lower my risk. But the strategy lines up, so I'm going to follow it. So instead of risking 2%, I'm going to risk 1.5%. So do you understand that the strategy is what's inside the brain, what's inside the mind of the poker player when they're sitting down, they dealt their cards. And it's not just the cards. They know exactly how they're going to be dealing with the players in front of them. They know exactly how they're going to be dealing if they are dealt a flop on the river. I don't know if that was redundant, but that is why I find investing very similar to trading, because investing is trading on a longer term. You have your criteria, you have your frame of mind, you have your markets that you have in mind, and the difference between trading and investing is one word: duration. You're going to be holding trades longer than a couple of years, and believe it or not, I can invest stocks based on a technical system. I can just look at my indicators on a monthly basis, see it break out, and then hold for 3 years. I didn't look at the fundamentals, I didn't watch the Bloomberg, I didn't see the economic, but the criteria lined up. Does that make sense at all? Because it gets very complicated and advanced when we're comparing strategies to the markets that we are choosing to trade. Dr. Sam, I don't know if you're still, just unmute yourself. All right, we'll get back to Dr. Sam soon. Seal, I see your hands up. Megaphone's yours.
Well, I wanted to make a comment about something he said earlier, but we've already moved on.
Go for it. No, please.
It was about the statement which he made regarding having a consistent strategy which you never deviate from. I think it's critically important to have the kind of flexibility, to be able to look at changing circumstances, and then to see how they might affect your strategy, and then make subtle changes as required.
Okay. I agree.
I can give a practical example.
Yes, go give your example.
Let's just say that I had a substantial holding of Apple stock, let's say as of last year. And then let's say the COVID-19 thing happened, which obviously did. If I was smart, if I would have made subtle changes to my strategy, well, I guess that this is a bad example because the price lowered and then it raised again. I take it back. I'm not ready to give a good practical example. I just know that in general, it's good to look at the markets, look at your strategy, and if you see a big trend that goes counter to what you normally do, you should account for that.
So let me give you a practical example. As a trader, and just increase the duration as an investor because it's similar. So as a trader, what we do is you back test the strategy, you forward test the strategy, and then you real test the strategy. And then you put a little bit of money in and you test that strategy and you see how it does, correct? And then as the markets start to, as time carries on and you start forward testing more, you start putting in more money, and now you have a portfolio and an account to base a strategy on. But then what if you are not feeling very confident with your own strategy based on a number of variables? For example, the timing involved with how long you're holding a stock. Are you an investor that wants to hold it for 50 years? Or are you an investor who wants to hold it for 3 years? The markets that you choose. Are you an investor who wants to hold high gearing instruments or even derivatives? Or are you an investor who doesn't want to hold gearing or derivatives and want to hold shares instead, so that you know exactly what you'll lose if the market drops to zero? Are you an investor who looks at the technicals or the fundamentals? And then once you have that strategy and you've got the years going by, then you're saying, but what about if there is another strategy that is better, that works better within the market environment and works better with my personality? Well, then you carry on with the control. All right, I've literally made this up right now. Let's call the made strategy a control. You carry on with the control. You carry on persevering with what works according to the strategy. And then on the other side, you go back to the drawing board. So you have something that's making a consistent income, and then you go back to the drawing board and you create another strategy that you're dying to test. And you go back and you do the back testing, the forward testing, and the real testing, 20 or 30 different investments, and then compare between the two. Which one do you feel more comfortable? Which are revealing better results? Does that make sense? So that you can carry on and being fluid. So I've been a breakout trader for the last 19 years, and I've got other strategies that I've been testing in the background, but I've never actually put my money where my mouth is for the ones that I'm back testing, because the results are not as great compared to the breakout trading strategy, right? So this means that I haven't cracked my own strategy yet. You don't want to have a strategy that is earning less money than your current strategy. You always want to better it, right? But keep the control. As Bruce Lee says, I don't fear the man who's done 10,000 kicks. I fear the man who has done one kick 10,000 times. All right? So jumping from system to system to strategy means that even after 10 years, you will have 1 year experience as a trader or an investor 10 times rather than having 10 years of experience within one strategy or system. Does that make sense? Welcome to those who've joined Galactus. This is a trading event discussion where we go around the virtual table and we ask questions, and then you're happy to answer. If you want to be a trader, or you are, then this is the perfect place for you. Or if you just want to get on the discussion and challenge your mind as well, this is perfectly acceptable. So I don't know if you want to introduce yourself, just raise your hand. Dr. Sam, you were raised your hand. Thoughts?
Timon, yeah, I just wanted to agree with Seal 100%. No strategy is cast in stone. And normally what one would do is that one would review your performance, and if your performance is as predicted, you know that your strategy is solid and you probably wouldn't deviate from it. But if you suddenly find that your performance has dropped, then obviously you would change the strategy. And I think a good example was the COVID crisis, where you suddenly had to change your strategy, but that is a black swan event. It doesn't happen every time. So that was my first point. My second point is my issue regarding the difference between poker and investing. And I said that poker, you get your cards lying down, and investing, you get your cards facing upwards. And I rest my case because it's exactly what you said. You said Warren Buffett chooses blue chip shares, and that means that his cards are up, and he selected from a pack of 52 cards, he selected what he wanted to buy, as opposed to a poker player who cannot select. Fate deals him whatever hand he gets, and then he has to make the best with that hand, and that's where his strategy kicks in. And his strategy is either I'm going to use this hand to my advantage, or I'm going to throw in. So that was the comments I wanted to make.
Dr. Sam, I need to disagree with you, because first thing is, the hands are not dealt down. As a poker player in Texas Hold'em, you get those 2 cards. Those cards are the markets that you are choosing. Once you have those 2 cards, the strategies are now going in your head, and you're saying, so let's say if it's an ace and an ace, that is Warren Buffett's Coca-Cola. If you get a 6 and a 5, that is Warren Buffett's, I don't know, Facebook, because he is not into technology and IT, right? So once he has those cards, he sees those cards, he's got all these strategies in his head to follow up with the flop. The second point that I mentioned today, or was it the first point, where they bet before the flop or before the cards. These are the guys that the cards are down and they are betting this huge amount of money because they have this luck that there's going to be great things under those uncertain cards. That's where you avoid and you fold completely. But when you see the cards in front of you and you see an ace, you just need that one more ace, which means that it's okay to bet a little bit more. If you have a 6-3, 6-3 is a bad example, but like 6-10, now all of a sudden you've got to lower your risk and say, you know what, I'm not going to put too much into this hand, because I have a high probability that someone has a better hand than me. Does that make sense? You're still on there in the participation. Yeah, you are. Galactus, I saw your hand was up. Feel free to introduce yourself.
Hello everyone, I'm David. I'm from the United States, and I'm new to trading within like a month or so. So I've been dabbling a little bit with, a small amount of money, under $1,000, just trying to learn.
Do you have any questions at the moment? even though this is about gambling and that, I'm happy for you to ask a question, and let's see where we can help you.
Well, I can tell you, I've put like $600 into like a penny stock that gives a lot of dividends. So my intention was to get a lot of dividends on a monthly basis. And I don't know, that's just a strategy I was trying to see if it would even work, but it's only one stock.
All right. So what I'm going to have to say is dollars do not matter when you start off trading. Dollars does not matter. The only thing that matters with trading and investing is percentages that you decide on how much to risk and how much to gain on your trade. So as a starting point, what I do is I back test the strategies first, because there are penny stocks or pink sheets, whatever you call it back then, that have released dividends before, and then look at, did the market drop during that time? Did it rise? Which markets did I choose? And that should be a good starting point. So you're welcome to join, and I hope that gives some ideas on your journey. But do not think dollars. I don't care whether you have $10 million or $100. You don't think about the money. You think about the relative percentages within the your portfolio. All right. So if you made 36% on $600 in a year, that is successful. If you made, say, $10,000 out of your $600 in a year, I guarantee you're going to lose it the next year. All right.
All right, thanks.
Pleasure. You're very welcome. So let's just go back to the fourth point before we open the table, and that is perseverance is the key to ingredient to success. And this isn't just with trading and investing and poker. This is with regards to all aspects that you are passionate about. So if you want to be an Instagram influencer or anything, you need the perseverance. Okay, so you need to take the time and have the determination to become a successful trader and a poker player. With poker, you'll need to keep it, to keep at it. It's not about just going one day to the casino, trying it out, and then all of a sudden you're a successful poker player. No. These guys, as much as you hate them showing off their money and flashing every tit that they can find around boats and stuff, they have spent the time and effort to get there through a lot of failure and learning. So with poker, you'll need to keep at it, keep to your strict money management rules with each hand that you play. And with trading, you need to know your trading personality, know which trading method best works for you, and understand your risk profile. All right? And there is my favorite quote from, believe it or not, and I don't like sports, American football player and coach. His name's Vince Lombardi. I don't know if you guys know him. He says, practice does not make perfect. Only perfect practice makes perfect. So as a trader and investor and a poker player, you can practice once a month. You can practice once a week. It doesn't mean you're going to be good in a year. But if you're a perfect practice player, where you're doing this at least 1 hour a day, or at least 1 hour every couple of days, you have the advantage over the guy who only practices